Welcome to the jungle, you savages. My name is Blue the Bear. This is the Crypto Jungle. We take a look at the cryptocurrency market as well as traditional finance as well to try and give you a better idea of where we stand and where we are in a crypto price cycle. So if you want to have a better opportunity to identify when we are in the early stages of a bull market, then I invite you to hit the subscribe button or follow along if you're watching live on Twitch. If you are on Twitch, hey, don't be shy. Ask some questions in the chat. So we're going to start off with Bitcoin. We'll take a look at Bitcoin, Ethereum, and some other top cryptos. Take a look at the Forex market because there's some interesting things happening with the dollar as well as the S&P and the NASDAQ. And then we'll open it up to general chat. So without any further ado, let's go ahead and take a look at the king of all crypto. That is Bitcoin. All right, so we're starting off here on the weekly. I want to get kind of a high time frame picture here with Bitcoin on the weekly. We're still trying to prove to the market that we have the possibility of holding this level. We're trying to determine if the bottom is in, okay? Now, in the Wyckoff method, let me actually just pull up for a moment here an image over here, the Wyckoff method, accumulation schematic. So what we're trying to determine is, are we in accumulation or are we in redistribution? Now, the tricky, funny, confusing, and annoying thing about the Wyckoff method is phase A of accumulation looks exactly the same as phase A of redistribution. So what I'm saying is, in the early stages of the consolidation, it looks exactly the same whether it's going to go up versus whether it's going to go down. So you need a little bit more time and price candles to develop before we can begin to speculate as to whether the bottom is in. So where we are right now, we have our preliminary supply, this PS level, seller's climax right here, SC, automatic rally, AR, and ST, which is our secondary test. So we've just completed phase A as far as the chart is concerned. I usually leave this one on the point and figure chart. Let's make that the point and figure chart. And that's phase A. Phase A is the same whether we're going to continue to head down or we have proved to the market that we have a bottom in. Now, the interesting thing to take note of at this level is we do have a little bit of a bullish divergence here. If I put on the line chart here, you can see that right here, we have a low, and then we have a lower low. And on the RSI, you'll notice that we have a low and we have a higher low. So there is a little bit of a bullish divergence. Doesn't mean that we can't go down and print a new low in the RSI and repeat the phase A over again. But what it is telling us that momentum, downside momentum, is slowing down. So that's a positive sign. That's a step in the right direction. Downside momentum is slowing down as it stands right now. Now, we're also butt up against this downward sloping line of resistance. So if I just erase the, why don't I go ahead and erase the channel here and just focus your attention to this downward sloping line of resistance right here. So we're butt up against it right now. We are encountering some resistance currently, but yeah, if we do break out of this, I expect the market to respond positively and we could actually trigger a bear market rally. I'm not saying that we're out of the bear market just yet, but we can certainly potentially trigger a bear market rally. Now, certain things that I'm going to need to see for that to take shape and for that to become a reality is we need cooperation in the traditional financial market. So let's take a look at the NASDAQ. Ooh, I actually haven't even looked at this chart today, being totally honest. Haven't looked at this chart today. We were rallying off of this level, the area of the shakeout. This is the area of concern that I've been watching for a while, and the individuals who have been in the private VIP group have also been watching this level here at around 11,000 here on the NASDAQ E-muni futures contracts. We did wick below. We did kind of get a new lower low in this structure, which is very bearish. And now on the weekly candle, we're not seeing a lot of strength here. Let's go back over to the daily. On the daily, it is showing as a retest, but this is a very ugly weekly candle. And if we get that weekly candle close with this basically, gravestone doji formation, I wouldn't be surprised to see this be a continuation. If we get a continuation to the downside in the NASDAQ, taking out this low, this previous low that we printed in June, it's going to get ugly. It's going to get ugly. I'm not going to sugarcoat it. It's going to be probably a large extension to the downside, which would go against the positive sentiment and the positive structure that we're seeing inside of Bitcoin and cryptocurrency. Bitcoin and crypto, we are not decorrelated from traditional finance. If we see a large move down in traditional finance, you better believe that we're going to have a large move down in crypto. We have not decoupled from the traditional financial market just yet. We're showing a slow of momentum to the downside in crypto, but we're not seeing that same momentum slow down here in traditional finance, and that's really going to be the momentum. We're lockstep with the stock market, especially on the tech sector side. Same sort of thing that we're seeing here on the S&P. Did get a nice positive move off of that low, currently retesting. If we break below this, we can actually move this line down here because this is the new threat. Basically, if we fall below 357 on the spider here, it's lights out. We're probably going to head down to 291, bottom of the channel, another 18 to 20% move to the downside, which in the S&P is headline material, and it's going to be all over the news. Taking a look at Bitcoin on the or taking a look at Ethereum on the Bitcoin pair, looks terrible. So Bitcoin is certainly poised to be the asset that is going to outperform Ethereum, at least from what I'm seeing here in the chart. Looks like a distribution. So if this continues to head to the downside, it doesn't mean that either Bitcoin or Ethereum are going to rally. It just means that you should be holding Bitcoin over Ethereum in terms of what this chart is saying. It's trending to the downside, looking like an LPSY, last point of supply, could bring us down to the bottom end of this widening megaphone pattern here. You can see that pattern right there. So we could find some support here and then maybe trade down at the lower end of that, which would be right around 0.4 BTC per ETH. I'm not seeing a lot of signs of anything really taking off in the short term. We were seeing some interesting price action here in XRP. XRP, of all coins, this is one that, I'm not a huge fan of XRP, but based on everything that we're looking at out there, this is the only one that actually has anything of any value. We are inside of this consolidation right now. We're trying to break out, but we do have some really heavy resistance above us, basically all the way till you hit 60 cents. So if you start to see XRP trending in the direction, trending up beyond 60 cents, there is a possibility that we could rally to maybe $1, just over $1, something like that. But yeah, other than that, the market's still quite bearish, and a lot of that bearish sentiment and a lot of that supply side price action is coming from the effects of the DXY, which is showing up in traditional finance like the NASDAQ and the S&P. Can you look at PLU? It has real product. You earn rewards in PLU as you use the debit card. Yes, Plutus. I have heard about this one. Let's take a look at PLU. Here's how I'm gonna describe a fucking liquidity pool to you. Okay, here's the deal. All right, you take your ETH, okay, and you take your ETH and you give it to me, and then I'm gonna give you 1 ETH worth of sand. I'm gonna give you a bucket of sand. Cross my heart, swear to God, I'm gonna give you a bucket of sand, okay? And if you stake your sand in my liquidity pool, I'm gonna keep giving you sand. I'm not talking about the metaverse. I'm talking about sand from the beach. I'm gonna keep giving you sand, okay? I got a lot of sand. I go to the beach, I grab some sand, and I'm gonna just keep adding sand to your bucket of sand. That's DeFi right now. Take something valuable from a user and then give them something useless with the promise of continuing to give them something useless. But no, it's not useless. It's a governance token. You're right. You're right. It's a governance token. So what you can do with your sand is you can vote. You can tell me what to do with the protocol and how much more sand I should give you. That's fucking DeFi. It's useless. So like the PLU token, you stake it and you get more PLU. It's like it's a fucking useless turd. And if you stake it, you get more useless turds. I don't care. What I'm more interested in is what's becoming a little bit more of a trend, and that's called real yield. Okay, so projects like LooksRare, LooksRare USD. Here's the thing about LooksRare. You buy Looks tokens, you stake Looks tokens. Guess what you get in return? You get a little bit of Looks, but then you get wrapped Ethereum. Okay, that's fantastic. GMX. GMX is another one. So we get some GMX. Is it GMX? GXM? I think it's GMX. Yeah, GMX. GMX, same thing. You take the GMX tokens, you stake them, and you get wrapped Ethereum. That's a derivative. That's a dividend. That's real share. Where does that Ethereum come from? In the case of LooksRare, it comes from NFT traders. When NFT traders trade on LooksRare, it takes some of their ETH and it gives it to the token holders. That's a share of stock, ladies and gentlemen. If you have Coca-Cola stock and Coca-Cola has a really good year and they take the profits and they profit share it with the shareholders, that's what I'm talking about. I don't want another fucking pile of sand. I want some real shit. I want real currency. I want to feel as though I own revenue stream from the protocol. So that's what I'm keeping my eye out for the next cycle, because I think the next cycle is going to be a lot closer to the stock market. You're going to have real ownership in the actual use volume of these decentralized applications, and that's what I'm excited about. If you guys aren't in the private VIP Discord, check out the links below. I am running a promotion this month, so it ends at the end of the month. What's the date today? It's, oh, you got lots of time left. So you get an additional 20% off any package that you choose. The yearly package is already discounted at 30%. So if you apply the coupon code SURVIVOR, because you're all bear market survivors, if you apply the coupon code SURVIVOR at checkout, you'll get an additional 20% off, which basically gets you a year in the group for 50% off. Which is, I think, great. It's a bear market. We're trying to get some volume into the group and get some money flow so that I can continue to provide quality content on this channel so that I don't need to ever take a paid ad. I'm never taking a paid ad. I'm not taking a paid ad unless it is a product. So like crypto wallets, everybody needs a crypto wallet. We have some videos coming up on crypto wallets and stuff like that. But I'm never going to take a shill endorsement from a project to shill a coin. And the only way that I can do that is if I can make this group profitable enough so that we can continue to provide content on a weekly basis for all of you. So and if not, that's cool too. Hey, lots of free content out here, and here is more of it. Thank you all for joining into the live stream. We will be back on Tuesday. We'll be back on Tuesday, so we will see you then for the North American show. Thank you all for joining in, and please trade safe. It is jungle out there. Peace.